Hello, I'm Kim Cockrell, and I'm from the New York Shipping Exchange, also known as Nyshex. And today I hope to share with you a little bit about how new technology that we're building is going to help exporters of recyclables lock in freight guarantees and make their supply chain a lot more reliable. And before we do that, let me tell you a little bit about my background. I come from 17, almost 18 years in the shipping industry. I've been with Nyshex since we started up our solution 3.5 years ago. And before that, I was working on the carrier side, the ocean carrier side, and working in sales and sales leadership roles and trade management roles as well for a major ocean carrier. And for me, it just felt like Groundhog Day every single day when I was working for a steamship line because we were constantly chasing down the contracts that we were signing because other carriers had underquoted us and the volume had shifted, or my own organization was rolling my customers' cargo, which was terrible for me to have to win their trust and then go back in and apologize that our organization didn't support actually moving the cargo as we contracted. And there we were constantly just handling invoicing issues and just the whole time it just felt that I was working very reactively. And so when I heard about Nyshex and the solution that they were building and the coalition of shippers and both BCO and MDOCC and carriers that were committed to changing the industry and transforming this and making shipping more reliable, I knew that I had to be a part of it. So I want to just spend our time together talking about some of the challenges that are facing exporters and especially recyclables exporters today. So I'm going to walk through some of the things that are happening on the macro level that are impacting all of you. And then I'm going to speak to how the solution that we have created is going to address those issues. So ultimately, ocean shipping is filled with uncertainty. You as a shipper, you want all the vessel space you need and you expect a consistent price, but instead reliability just continues to get worse and worse and rates are more volatile than they've ever been. And you have a contract with your carriers in place, but you don't have a guarantee that what you signed will actually be delivered. And if we just look into some of the challenges that are really driving this, number one, we went from 22 global carriers just a few years ago down to 9, and that's down to 3 carrier alliances. So all of that is just a result of the net result per container dropping 92%. So margins are super low. It's caused so much industry consolidation. And what that ultimately means is that ocean carriers have economies of scale and significant market power, and shippers have fewer choices. And what that does is the homogenization of this drives the commoditization of the ocean industry, and that causes extreme price volatility. So if you look at last year for the full year, the volatility of the S&P 500 was 4%. The volatility for agricultural prices were 7%, energy, Brent crude oil 11%, while shipping fluctuated 22% standard deviation from the average. That is far more volatile than Bitcoin even, and it makes it incredibly tough for shippers to know what their cost is actually going to be. And if we continue on that vein, the cost to export a container in 2020 from Northern Europe to East Asia nearly tripled within 8 months. Ocean carriers now are charging 50 to 80 to 100% of the head haul rate. And normally for us shipping geeks in the audience, we understand that the head haul is what drives the profitability for a lane. So if the export rate or the backhaul rate when the ships are empty is commanding just as much as the head haul, that's really a dire situation. And it's not just a COVID factor. This has happened in 2017 when we saw European export rates sustain at 75% of the head haul rate for 6 months. And in 2015, 2016, we also saw spikes above 100%. And if you look at it for US exporters, it's the same situation. The rate from the US West Coast to East Asia rose by 47% within 5 months. It's just insane. And it's impossible to know how to quote your customer for the deals that you're signing out into the future. And then, as if the situation wasn't grim enough, the service reliability is at all-time lows. So just looking at a recent Drury report for the past quarter or so, 83% of shippers have had their cargo rolled over the last quarter. It means they were late to their shipper. They are their customer at the end. Their cargo was delayed. It was left at the port. 10 to 15% of containers from Europe were left at the port. 5 to 10% of containers from North America were rolled as well. So a total of 229 sailings over 6 months were canceled. And that means it's a highly unreliable transport product that we're all relying on. And what that means is $23 billion of economic waste are lost every single year. And that's due to supply chain unreliability, increased inventory holding costs, and downfalls, causing bookings to be canceled at the last minute, and blank sailings, the cost for carriers of having to blank their sailings and just lay up that capacity. This is a really, really significant price tag for the industry, and it's not sustainable. So now I'm going to kind of dive into how we address that. So what are we? We're a coalition of shippers, of BCOs, of NVOs, of carriers, of industry stakeholders, and technology players in the industry, financial players, and we all just, our goal is to make shipping more reliable through enforceable contracts. So there are a lot of carrier in-house guaranteed priority loading programs that are coming out into the market now, but Nyshex is the only neutral multi-carrier solution for guaranteed contracts. And what that means is we're built for shippers. Actually, it's free to use Nyshex if you're a BCO or an MVOCC. The cost of using Nyshex is borne completely by the carrier. It's $5 per TEU. And every feature that we release is built with our BCO and MVO members in mind. We have a governance built around a member council. We're lucky enough that we have one of our member council individuals speaking tomorrow, Anupa from C-Link, so you'll have to ask her feedback on using Nyshex. And everything that we do is just built around tools that shippers need, and that is going to make them more reliable with their ocean carriers and vice versa. We are also the dashboard that will allow you to manage and view your reporting for all your carrier contracts in one centralized place. So instead of going to all these different carrier sites or different tools, you have everything in one place and you're getting one version of the truth in that platform. And we also have a standardized set of rules that are common across all of our carriers. You can trust our standardized boilerplate that is the same for all of the 6 participating carriers. You can bring in your own boilerplate, but there's a standardized set of rules and it's all the same for all the carriers. So it's a lot less cumbersome and uniform across all of your partners. And then we're a neutral third party. So there's always that temptation if you're trying to build an enforceable contract between 2 contractual parties, there's always going to be that temptation to sweep non-performance under the rug for one side or the other. If you're a shipper and you really need your relationship with that carrier and they're not performing, you don't want to put their feet to the fire because you really need them and they need you. So there's always going to be that temptation to just sweep it under the rug, and that means one party is going to get left with the cost for the other party's non-performance. So we neutrally and fairly, independently monitor contracts, and we ensure that everybody's performing. And when an exception does arise, which is less than 1% actually on Nyshex contracts, we identify them, we resolve them, we keep the carrier and the shipper relationship super strong because we're fixing it. Your hands are clean. Your relationship is intact. And over 200,000 containers, Nyshex contracts have shown 99% reliability, and that is a mechanism of the 2-way performance commitments. They're the same performance incentive is shared between the shipper and the carrier, and when there's money on the line, both sides will follow through with the agreement with 99% precision. And the industry average is much more terrible than that at 67%. So everything we're doing is really just helping the people that do global trade do their job better. And we have 100+ years of knowledge and logistics and shipping on our team. We are people that have worked for almost all the carriers that exist and shippers like Walmart. So we're creating global change and driving transformation in this industry, and you can too. So you're probably wondering, how does this work? What is it at its core? Well, we're certifying your contracts. Nyshex certified contracts are powered by innovative technology and a proven process that enables you to do three things. You can create customizable or your own contracts. You can use our boilerplate, you can use your own boilerplate, but you're creating a customized, clear contract that has two-way commitments in it that is going to guarantee your performance from both sides. And then secondly, you're going to be able to monitor both your and your carrier's, plural, compliance to contract. So you're going to know at all times how reliable you are as a shipper in general and how reliable your carriers are. And then third, you can outsource the monitoring and the resolution of all issues to Nyshex. If your cargo gets left at the port, you get rolled, it's delayed, anything that happens, if your rate is not billed to you correctly, you can trust us to fix that. We're your unbiased and neutral third party that's going to help you keep your relationship intact and get what you contracted for. And you can do these three things with all of your carriers in one centralized location. So I wanted to just break it down in a practical way and just give you kind of a little use case. So a recyclables customer in Asia wants delivery of a set amount of cargo in November, and the exporter knows that they know the cost to acquire that commodity in November, but they don't know the cost of shipping. That exporter has two choices. They can, one, wait for the November ocean rate sheet to come out, or whatever the rate will be, the spot market rate at that time, and just hope that they've added enough buffer to the total cost of the deal that they're selling their end customer. And they'll have to hope that there will be enough space and equipment to accommodate it. And then secondly, their other option is to just use Nyshex, and you can lock in your rates. You can pick all of the port pairs, all the lanes that you're going to need to fulfill the book of business that you have for the next quarter or the next month. And you can lock in your rates and your space and your equipment and know that if you get rolled, you'll be compensated for that with the two-way commitment that's in the contract, and you will be given priority service to fix the problem immediately. We'll make sure of that. Just wanted to show you, we're a coalition, as I said, of BCOs, of NBOs, and 6 global ocean carriers. These are just a few of the members that we work with, and we're growing each and every day. And how they're using it is, first of all, they're hedging against volatility. So they're locking in just a portion. And for some of them, it's 10% of their total cargo. For some of them, it's 70% of their total cargo. But they want to have that hedge. They want to have a portion of their cargo that is absolutely locked in. And secondly, they want to know that their cargo is going to be prioritized by carriers. There are operational processes that carriers are putting into place to make sure that they do not roll this cargo. So it's definitely prioritized, because the carrier will owe money if it's rolled. And then third, they're keeping their freight spend on target. So if your contract is built to work, and if your contract is performing for you, you're not going to have to switch to a backup carrier and pay a higher rate. You can stay on target with your freight spend plan. They're also using it to purchase spot allocation quickly and efficiently. You can you can add in lanes to your contract digitally and quickly. You can negotiate with trade managers right on the spot, and you can get the space that you need and know that it's guaranteed. It's not just a rate, it'll actually move the cargo. And then finally, they're using it to enhance their carrier relationships. We have many testimonials online on our YouTube channel that you're welcome to visit, and you'll see that each of the shippers report that at the end of the contract, they ended up having a better sense of trust and a stronger foundation with their carriers, which inspired even more business moving forward. And Nyshex is free for shippers, as I pointed out. There's really nothing to lose. So we actually go as far as to guarantee that if your cargo doesn't move according to contract, Nyshex will guarantee that any financial penalties owed to you will be paid out. So across 200,000 containers that we've moved so far, we've had 99% compliance to contract. That means on-time departure. We've had 100% penalty payout, and we've had 0 cost to shippers. So you might be thinking, how do I get started? Well, what we would do is, encourage you to reach out to us and help let us talk to you about the goals that you have for your contract. Maybe you already have a contract that's just not working out for you, or maybe you want to build a new one and we can help you do that. So we're the experts, free consultation. We'd be happy to talk to you about the contract that you need. And then secondly, what we do as part of our process is just bring in the carriers. If you have carriers that you already have great relationships with and you want to talk to them and just bring us into the conversation, we can help you make that clear and enforceable contract with them, or we can help find a carrier that's going to be the right match for what you're looking to do. And then finally, you'll create your Nyshex certified contract. So we'll handle all the digital signatures, filing it with any FMC or any parties, depending on which trade lane you're shipping on. And then we're going to turn on the electronic data interchange with our direct APIs that we have with each of the carriers to monitor booking data and all the container milestones. And we'll start sharing that visibility to how your contract's performing at the booking level. And we'll be able to manage every exception which arises because we're looking for every container event milestone. And if one's missing, we triage it and we come up with a ruling, we investigate it, and we keep track of that for you. So at all times in your contract, you'll know how it's performing, where you're having issues, and you'll be able to proactively fix it before you have to spend more money and go to a different carrier. So really, I wanted to just leave you with one additional resource for you. We have a website called, it's a recyclables website. It's at nyshex.com/recyclables. And then my email address is there as well, kimberly.cockrell@nyshex.com. And I'd love to hear from you. Just love to work with you on customizing a contract that works. Thank you so much for your time.
Thank you, Kim. So what we'll do now is take a question and answer session. I'm going to bring Kim back on the screen.
That was the easiest presentation I've ever done.
Let me see. How do we get you back up here? Here we go. I'm going to make you the host now, and you are in charge of running the show.
All right. I'm back.
So anybody that wants to ask questions, you just raise your hand. There's an icon at the bottom. I see one question in the Q&A, Kim. You might want to tackle that one first.
Yeah. DJ, did you want to type it or are you unmuting?
What was that again?
I'm not sure if DJ is going to type it or unmute and ask the question.
Let me see. So Diego has a question. Oh yeah, he needs to unmute if he wants to speak. Is that what you're asking?
There, I
Hi,
unmuted.
Kimberly.
Hi.
Hi, Kimberly.
There we go.
How are you?
Good. How are you?
Well, I heard very well your exposition, and I have two questions. One, which kind of route you cover with your system, with your web page? And other, which is the minimum volume you start with the contracts? Because, for example, I work with recycled plastic, and you start with 1, 2 container, 4 containers at trial load, and then you start with the big volumes. So how you deal with that when you start with low quantity of volume, but if they approve you have to increase. For example, I have now I sent to Mexico four containers, but the volume is 60 containers per month. But I need to know, for start to work with a contract, how much is the volume to start?
Sure. So your first question, what lanes are we live on? Today we are doing Trans-Pacific westbound, Trans-Pacific eastbound. We're doing pretty much US to anywhere. We are going live Asia, Europe later this year or early 2021. So that's where we're active at the moment. So I don't know what your origin is, but if it's US, well, US to Mexico couldn't do for US flag reasons, but depending on your origin, I could definitely take down your information and keep you in the loop when we do make that live.
Okay. Yes, we work now with Long Beach and Los Angeles Port to Manzanillo Port.
Okay. Okay.
That is one route. We make many routes, but Other thing, um, how you are facing with the HS code when you talk about waste? Because um, I have many travels to make load from USA and Europe to send to South America. My skill and my focus is on South America, and we are facing a lot of trouble for load that kind of waste. You know, 0915900, the J code for waste, and we have facing problem with the vessel company. They don't want to load our goods. We have problem. I talked to Chris months ago in Belgium, and now, for example, we had to move from Long Beach to Paraguay, Asunción Port, and we are facing trouble because the vessel company don't want to load our goods, our recycle.
Hmm.
So how you are dealing with this kind of HS code?
Well, so really, it's between the shipper and the carrier as to the commercial agreement that they want to make. We are the technology and the process that enforces that. So, I would say we could certainly try and see if we could find a match for you with the carriers with whom we work, and see if we can try it that way. Ultimately, it is, between the carrier and the shipper.
Okay, thank you very much.
Yeah, absolutely. And as far as volume, your question about that, you can build a contract from, 1 to 52 weeks in duration for any volume that you wanted. So that's no problem.
Okay, thank you very much.
Of course.
Anyone else have questions for Kim? All right, Anupa. I think we can hear you.
Hi.
Go ahead.
Hi, Kim. How are you?
Hi, great.
I have a question. When you say that uh, you are sort of giving like a guarantee of the arrival times or when vessels are going to reach, obviously you don't mean for those that get delayed by weather conditions, right? Because
So
that would again become a carrier thing.
yes, so we are enforcing the departure time. So all the container milestones have to be hit all the way up to the vessel leaving the port on time. So if the vessel it departs later than your contract says, then obviously you'll be getting the penalty.
But the contract doesn't generally state any specific vessels. It just gives you, a 3-month validity, and because this has been one of our challenges, in spite of Nyshex, has been one, blank sailings, um, weather, and sometimes just random excuses that this vessel is delayed. We don't really get a deep insight into why a vessel has delayed. Um, they give us different reasons. And, at this point, we're talking to the carriers. We're not really talking to Nyshex. And there are no vessel names in the contract. So how does one hold the carrier accountable for their vessels and their, haphazard schedules?
Yeah, absolutely. So, yeah, the contracts that you're doing, if I may say, are the broader monthly enforcement. We can do on a weekly basis, we can do on a monthly basis, we can do on a quarterly basis, and that is all just depends on the terms that you agree upon with your carrier partners. What I would say is, if that is a concern, then let's dial it back a notch and get you back to weekly enforcement. Now, if you're on weekly enforcement and the carrier delays you past that, calendar ISO week, you're delayed into the next week, you're going to get the deposit or their penalty. Now, that means that you also must operate under that same standard. So it's a two-way street. But if you wanted to, make stricter enforcement options, we certainly could do that.
Okay. Um, I don't know if that will work or not. I'll have to check with, a lot of people within the organization, but maybe we can have a one-on-one later and speak a little bit more in detail of,
So,
what options there might be, because we might have just gone taken the path of least resistance and not really explored all the options that we might have. Because I
yeah,
think at the moment we just see we see a lot of the same stuff that carriers tell us without Nyshex that they're telling us with Nyshex. You know what I'm saying? So there's not um, we get a good space guarantee. I'm not saying that we don't. Um, yeah, but it's interchangeable. I feel like they make up their rules as they go through the months, and I feel like we might have to sort of go back to the basics and look at the fine print again.
yeah, absolutely. So, I mean, according to our rule book, and just for DJ and Chris's background, we have an extensive rule book. It's like 100 pages, and it says if your trucker waits more than 3 hours, that's a default. If there's, just in every eventuality, there's some verbiage that takes care of that. The only thing that a carrier can do, I mean, okay, if your contract stipulates something specific and they deviate from that, it's a default, and you're going to get the carrier's collateral. You're going to get a penalty paid out to you. But the only one that the contract allows for is a blank sailing. If there's a blank sailing, it's not a default, but you're prioritized on the next vessel. Other than that, there's no funny business that the carrier should be able to pull in delaying your cargo. So yeah, Anupa, I'll take that as an action item to get with Yancy and the
Okay,
team and just let's go
perfect.
through some options about just kind of tightening the enforceability of these contracts. Because the beauty of having a monthly contract is that you don't have to be in a cookie cutter, 40 this week, 40 the next week, 40 the next week. You can have that flexibility, but that also gives the carrier that same flexibility, which may not be working for your business. So we can
Right.
we can tighten.
Okay. Okay, makes sense. Thank you so much.
Yeah, thanks. It's a good question. Anybody else have any questions? DJ, got another one. Diego. Do you go at Diego or
Yeah.
DJ? It says DJ, so that's why keep calling you that.
Hi. I have another question.
Yeah.
What do you think about this increase of the rate of the price? What do you think? What is the fundamental? Because if you're seeing the logic, we are in pandemic, since we don't have too many trade, and why the rates increase so much. For example, I'm buying from Vietnam to send to Brazil, and I receive around 100% of increase rates. Something illogical because we don't know what's going on. You could explain what's going on in the market, why increase so much when we don't have so much trading?
Yeah, it all kind of goes back to, what we were speaking about in the beginning of the presentation is the consolidation of the various carriers down from 22 to just 9 lines and 3 alliances. So there's really just 3 operational alliances that are running the show. And while they can't collude on rates because that's illegal, and that they're not able to talk about rates, they are able to withdraw capacity and kind of, since they're sending signals with GRI announcements and things like that to just keep the rates up. So what they've done is kind of created this false imbalance of space and with demand. So once obviously part of that is we went into a recession, people stopped. They were telling their factories in Vietnam and in China, pull the containers out, we don't need it anymore. People aren't buying furniture, people aren't buying house things right now. We're in a recession, we don't want it. So it wasn't their cargo yet, they left it at the port. And then, so demand dropped abruptly for the carriers. And in order to make sure that they didn't destabilize the rates, they withdrew a bunch of capacity by blanking all these sailings, by laying up vessels, by slow steaming vessels. which basically meant that, for the 4 options that you had every month to get out of Vietnam, now maybe you only have 2. So they've kind of played with that supply demand and balance so that they could drive the rates up. And what you see is people that even are contract holders with ocean carriers are not able to get space because the carriers see that on the spot market, people are so desperate for space that they're taking that cargo because it's paying a lot more. And the people that have contract rates that are lower, they're just rolling them time and time again because they're cheaper. And obviously the carriers have been losing money for a very long time. Margins on a container are abysmal. They've come down so much over the years. And so it's, part of it is carriers just, trying to keep rates up. Anupa, do you have anything to add to that? Do you see anything in addition?
Hi, I do actually. I actually don't see that there has been that much decrease in exports, not just from USA, but I would add in a few other countries, even those that have been hit by the pandemic. I also know that the ongoing trade war with China, where China has banned several scrap items, has made it possible for their exports to go high, which means that any cost of shipment from China going to anywhere else in the world, not just the US, the rates are so high and people are willing to pay that price. Literally from India, the shipping companies are happier to repo their containers into China than sending them from India or from the areas around, like for example Malaysia or anywhere in the Far East to these countries. They'd rather take them to China because China's paying a lot more on exports. And the same concept is kind of being seen in the rest of the world, is that everybody's happier to go to the place with, for example, for US to China, the rates are crazy low. They don't care right now. None of the shipping lines care how much it's going to cost them to carry a container from, say, Long Beach into China, because they just want all their equipment to go to China because they're getting a lot of money to do an export out of China. That, I think, has also been one of the major factors for increasing rates from certain sectors. Yeah. We've also seen a lot of decrease of rates because of this. So it's not just that there is an increase. And then the next thing is the blank sailings. A lot of shipping lines have made blank sailings, and as you know, Diego, right? I think who's on the line. As you know, most lines are now using the same vessel. So CMA and HAPAG will use the same vessel. So if one vessel's down, it means all of them don't have any capacity on that vessel. So obviously the next one is going to be overbooked, so on and so forth. And yes, they are cutting down the vessels because of cutting down costs. So yeah, hopefully that gives you a couple more reasons and insight into this.
Yeah, that's good. Really good points. Yeah, equipment is super tight. And like you said, from the US, it doesn't seem that volumes have decreased. And I mean, now we're going into grain harvest. And so those volumes are looking really strong as well. So, I think, Diego, you were saying that you were concerned about your Vietnam exports. But, from the US, I think for your US to Mexico stuff, equipment continues to be an issue, like Anupa said, just repoing it back rather than waiting.
And actually, I think Vietnam is one of the worst hit because they're the first ones to have banned plastic scrap. They're the first ones to have banned so many different types of metal scrap. They just don't have the equipment there.
I will recommend to all, you can hear me?
Mm-hmm. Yeah.
Interpol make a report, it's a very good report when they describe the route of the waste and the illegal waste. And you will see you have a lot of trade of a lot of route from USA to Europe and Europe to Southeast Asia. But for example, in that report, our region, South America, was not touched by any illegal waste, but we are banned from Europe to send waste, for example, to Paraguay or Brazil. So my view is China and India banned the import. So all that is scrap now are in the, we don't know which country are accepting that, because Malaysia, Vietnam, we know that country cannot hold all that volume from China or India or wherever. Even more, Hong Kong closed this month, closed the import of scrap. So we have a huge problem in the world because we don't know which that way will go now, because to China, they don't go to China, they don't go to India, and the Southeast Asia, the satellite countries from China, they cannot handle all that volume. So we don't know where go that now. But if you see the report of Interpol, it's very clearly where go the waste in the legal waste. Okay.
Yeah, thank you. That I'm definitely going to check that out.
Yeah, you can understand how was the move. They make a report in the last 4 years about what is the move of the illegal waste. You will see a lot of illegal waste come from USA and Germany and go to illegal landfills in Vietnam, Singapore, Malaysia, and we don't know now exactly what's going on with that kind of waste.
Yeah. I see there's another participant with a hand up. Just are you able to come off of mute, Nand? I think you might be on mute. Let me see if I can unmute you. Oh, not that one.
You're trying to bring back in?
Here we go. Now I think you're off mute, Nand.
Yeah, I can be.
Okay.
Can you hear me?
Yes, we can.
Yeah.
Hi.
With the consolidation of the hi. So my question is, with the consolidation in the shipping industry to such a large extent, I mean, this is more of a follow-on on what Anupa was talking. Now, how do you think you're going to make the shipping lines accountable? Because we are finding this getting day and day difficult. With blank sailings, with rollovers, with a mess. The shipping industry is in a mess. As an exporter, we are very uncertain about when our shipments are going to happen, when our bookings are, whether our bookings are going to be honored, and we find it very difficult to make the shipping company accountable for it. Even for situations where they are at fault, we find it very hard to make them accountable and pay for the losses. So I don't know, with all this going on, how are you going to deal with it, and how are you going to make them accountable?
So great question. Thank you for that. Basically, there's a framework that the carriers have all agreed to, and it's standardized across all carriers. So just like I kind of made the example of a second ago, if a trucker has to wait outside the port for more than 3 hours, it's considered a default. And so it's very granular as to if chassis if there's no chassis, then this, so they've agreed to these rules. So what we're doing is once you form a contract, and as we've kind of discussed, it's fully customizable because one contract might work for a NUPA and another contract might work for you. So just getting the contract together with your carrier partners is going to work for you with clear terms and clear expectations is like number one. That is the most important part. The second part is just making sure that we turn on we have a direct API with the carriers that enables us to just monitor each and every container milestone. So we're providing you with real-time data as to how your contract is performing, and you'll always have a pulse check on how that's doing. Then on top of that, what we're doing is if there's any exception that arises, so let's say you do get rolled, let's say that they do try to change your rate, let's say anything that happens that deviates from your contract, we are actually independently enforcing the agreement. So we actually go out and fix the problem for you and make a ruling as to whether or not there's a penalty that is owed to you. So I don't know if that explains, but it's just having agreed upon a common framework, making sure that the contract is completely clear for both parties and that both parties know how it's going to be enforced. So if you get rolled, we actually go as far as to guarantee that you'll get that compensation from the carrier. And if the carrier doesn't pay us, we still pay you. So if you're rolled and it's considered a default, it's not an act of God or force majeure, then or a blank sailing, then you're going to get compensated for having been rolled. Or if they don't have the equipment for you, or any deviation from the contract.
But is it not? I mean, there's nothing new in this, right? Because this is a general standard set of terms and conditions in a contract, which any other forwarder is also doing at the moment. But the only problem comes to enforceability, because I think what you're talking about are more or less a standard set of terms and conditions which play with every contract you have with the shipping company. Right?
That's true. That's right. But when you get rolled by a forwarder or a steamship line, do you ever get compensation for it?
No.
This is the difference. So if you are rolled, or if there's any deviation from the contract, there is a specified amount of money that the carrier is going to owe you. And that is kind of the driver. So there's two-way commitments. The shipper and the carrier both make a commitment to each other. If you, let's say you no-show, you're going to owe the carrier that same amount. If they roll you, they're going to owe you some money. So we are just a neutral third party that's more or less clearing those shipping transactions and just keeping the contract on track. So, if a carrier or an NBO tries to do this, if a carrier tries to do it, they're part of the contract, so they're going to be biased in their ruling every time. An NBO, I don't know of any NBOs that actually have a true guaranteed program where you're going to get paid if the carrier rolls you.
Right. So you're kind of something between a forwarder and a carrier, is it? I mean, how does it work? I mean, we generally get our bookings to a forwarder, and so you come in the shoes of a forwarder, or is it you're acting like an intermediary between a forwarder and a carrier? How does it work?
So we're not a carrier or an NBOCC or forwarder. We are just a tech platform and a framework that helps you get an enforceable contract. So we're just, we're kind of like your accountability mechanism in the middle, like an escrow partner or a clearinghouse to make sure that every single shipping transaction under that contract goes as planned.
Right.
And it's absolutely free for shippers. The carriers are paying us this service. There's value for the carriers as well to know that that cargo that they've contracted for is going to show up on time and that it's going to be guaranteed. So there's value in this for the carrier. So they're paying us. You're paying nothing. So think of us as kind of, we're a place to procure an enforceable contract, and you can make your bookings however you want to with a forwarder or otherwise against that contract. But we are just helping you get a certified contract that the carrier cannot default on. And
right.
Yeah, and our contracts are 99% compliant because the carriers are knowing that they're going to owe money if they mess up on that contract. They've created operational checks and balances and operational procedures to actually prioritize this cargo so that it doesn't get rolled.
Right, I got you. So we need to work with the forwarder on this and get the contracts done through you. That's how it will work, I guess.
You or your forwarder can, if they're an NBOCC, if they're licensed NBOCC, then they or you can purchase, or customize a contract through Nyshex.
Right.
And
does it work, Anupa? So, yeah, sorry, Anupa, does it work? I mean, that way.
Sorry, I'm not sure what you mean by does it work? Does what work?
No, so does it work? I mean, let's say if we take a booking with a forwarder and we draw a contract through them, how does it work that way?
I'm not sure how that would work. No, don't think
Okay.
so, actually. I think what you would have to do is work directly with the shipping line and then get
Yeah.
Nyshex involved. They're not a forwarder, or, I mean, if you're working with a forwarder, then no, it's not the same thing.
Yeah. Okay.
So you could
Yeah.
actually procure a contract through Nyshex and give that contract number to your forwarder, and your forwarder could book on your behalf. They could do all the value-added
Right.
services that they're doing today.
Right.
So it's a
Okay.
procurement exercise. It's just a little. You're making a bilateral shipping contract with an ocean carrier, but we're certifying that contract and we're monitoring the performance of that contract and we're handling any exceptions.
Right. We got it. Thank you so much.
Yeah.
सर वो मीटिंग थी आज मीटिंग
And then Adnan had a question here that he chatted. Why a clean bill of lading condition is not common in most parts of the world when forming a contract. That is a shipping documentation question that I don't think I'm the expert to speak to, especially in your guys' world. Does anybody want to take that one?
Would you repeat that question, actually?
Why is a clean bill of lading condition not common in most parts of the world when forming a contract?
What does that mean?
I
I don't understand that question. I could answer it, but I don't think I understand it.
Let me see if I can unmute.
What is a clean bill of lading?
Yeah, let's find out more. I'm unmuting. There you go, Adnan. Did you want to clarify the question a little, Adnan?
Yes, I most of the time I see that accountability is an issue, but I go to the banks and talk to different managers, and they ask why don't you get the term a clean bill of lading when the shipping company go and check by themselves that everything is all right, and they can verify the goods were the same as were mentioned on the contract. So why this practice is not common? I was curious. You said that all shipping companies maybe don't have the equipment to check, or maybe you can clarify further. Is it possible, or do you see in your regular practice that a clean bill of lading is practical when we form our contract?
Yeah, I'm not super familiar with what constitutes a clean bill of lading. Someone has just chatted. It seems he is asking clean bill of lading regarding letter of credit.
Yes.
And I am going to defer to an expert in the audience on this one because we do not get involved as Nyshex with the shipping documentation. All of the shipping documentation is between the shipper and the steamship line. And
I actually just Googled a clean bill of lading, and it basically means that the carrier is declaring that there was no damage or loss of goods during the shipment. Honestly, I think this is I think this is a carrier question. It's not something that even a forwarder can, because I'm an NVOCC, but even when we supply a bill of lading, it is always set to contain. I have never seen a bill of lading where a shipping line is going to, actually check your cargo and things like that. So this is a question for a shipping line.
All right.
thank you for that. I'm sorry. Couldn't help you
It's all right. It's
that
all
one.
right. No problem.
And then I think maybe we have quite time for one or two more before our session ends. But Ram has just asked, how do you enforce the contracts? What if the carrier refuses to pay? We enforce them based on the rule book that the carriers have. There are kind of back-to-back agreements that we have behind the scenes with the carriers that indebt them to pay if there are any D-forces according to those contracts. So we have our own back-end contracts with the carriers that govern the transactions that we're bringing forward or that the tech is providing to them. And if a carrier refuses to pay the penalty that they owe a shipper, we pay it on their behalf. We guarantee it. So, and then we'll pursue that further with that particular carrier. You are welcome. Does anybody else, let's see. I think this may be related to Adnan's question earlier, but someone from the audience just said this is not required anymore, not required as OE latest UCP clauses. Okay. Well, if there's no other questions, thank you so much. I appreciate the engagement. And like I said, I don't know if you could see with the icon on the screen, the little taskbar, but please feel free to contact me. My name, Kimberly, Kimberly .Cockrell at Nyshex.com. I'd love to chat with you, brainstorm with you about building a customized contract. And if you want some more information, please visit Nyshex.com/recyclables. We're in the middle of a website revamp, but that's one of our new pages that we just published overnight for you guys early. So please visit it and feel free to connect with us.